growth is tough. So I talk a lot about small business black holes where people get stuck, and the fault is on the owner, right? Because the owner isn't making the tough decision.
1, 2, 3, 4.
Hey there. Welcome to the Small Business Black Holes podcast with Alan Pentz, where we help you navigate today's chaos with precision. Your host, Alan Pentz, has 25 years of experience working in business and government, and he knows how the old rules have fallen apart. Each episode, we'll explore how to thrive in this new landscape by mastering the small business black holes while everyone else is still figuring them out. Let's dive in.
We are back with the Small Business Black Holes podcast. I'm back with the lovely Tonya Barenson. How are you, Tonya?
I'm good. I'm doing well, I should say.
Doing well. Yes, you feel good, and you're doing well. Yes.
Exactly. Let's get back to our grammar. How are you, Alan?
I'm great. Yeah, I had the flu for a little while, everybody in my family, but we're all back in whole again, so it's good.
You survived it, huh?
That's right. Influenza B racked the house. So what are we talking about today?
Well, I wanted to ask you about the owner's assessment that you have been developing and have up that people can take. And I wanted to ask you a few things about that. Tell us what's in it, what it tells owners about their business.
Cool.
That will take them through your journey.
A little commercial from me.
Yeah, I mean, it's okay to do a little commercial.
So I've been working on, developed a assessment. Right now it's called the Business Maturity Assessment. Probably going to change that name at some point, but it's looking at in the methodology I'm trying to do around owner independence, look at 6 key factors. So this is what the company's really going to focus on going forward is, I think one differentiating thing I always look at is like, what's the personal vision of the owner? So most people don't look at that. And I think it's really important because there's a lot of trade-offs in running a business. So I think you can get a business to a certain level. Say you get it to 2, 3 million, even 5 million, and you kind of stabilize there. And you can make quite a bit of money if you optimize at that level. And it's, you can make a good living. You can get your role to a certain point, certain level of independence where you're not key to everything and have a pretty good life. And, people would call that a lifestyle business, which is sort of a pejorative term from Silicon Valley, but I think it's great. Lifestyle is awesome. So if I have a lifestyle with $1 million in EBITDA, I feel good. What was that?
Work-life balance.
Yeah.
You have that at stage.
Yeah. So, a lot of, we say a lot that we want, most literature out there comes from venture capital or big publicly traded companies. So, the shareholders at AT&T really don't care about the lifestyle, work-life balance of the CEO, right? So they really don't. So they want you to optimize the business for dividends or whatever it is they bought the stock for, right? And VCs are investors. They want their return. So they're obviously going to emphasize optimization of growth and valuation. And an owner doesn't have that same as the stockholder, right? They don't have the same incentive structure and don't need to. And so I think they should really take seriously the choices they have in front of them to, growth is tough, right? So I talk a lot about small business black holes where people get stuck and the fault is on the owner, right? Because the owner isn't making the tough decisions. They're not investing, usually they're not firing the people who've been there for a long time that are blockers. They're not willing to take the risk of hiring someone who's a little more expensive and more experienced. And they won't make the other investments in the business they need to. That's why it doesn't grow, right? Plus, they're not willing to maybe do the work that they need to do to get to the next level. So being a black hole is a perception, right? So in my sense, black hole is you're stuck in it. If you're trying to grow, it's a black hole. If you're trying to live your life, it's like a lovely sunny meadow, right? So that's to me, and like this last couple of weeks, I did some interviews with marketing agency owners. And it was really interesting that 2 or 3 of them even started talking about how they had multiple agencies. And I started saying, why have 3? What's the point of starting new organizations? And I think their sense was, in addition to focus of the service, so like one's LinkedIn marketing, another's Google ads, right? Or whatever. So that allows them to focus to a certain extent. But they also talked about how getting to a couple million in revenue is a lot easier than growing an agency from 2 to 3 million in revenue to 10 because of these black holes. And you have to bring in more management. You have to pay them a lot more, and your costs go up and the risks go up. And
You've written about them in the past couple of weeks in the newsletter, which I'm sure some folks listening have read them.
yeah, so it's interesting to me that they've made this choice, right? That they want the lifestyle. Or they want the less risk. They want the money, right? That comes from that. They want the less risk and the other things that come with that. They're still ambitious, but what they're trading off is the valuation, right? So if you grow a company to 10, 20, 30 million and you have a lot more EBITDA under the multiple you're going to get on that is a lot higher. I mean, it's just easier for somebody else to buy a larger thing. They have to do the same due diligence on a $2 million company as they have to on a $100 million company. So they want to buy in chunks. And if you have 3 or 4 agencies that are all separate, it doesn't equal one big thing. And so what they're doing, it's also interesting that they're all a little younger. I think what they're doing is way thinking about selling at this point. So I think they're setting this up in a way that really optimizes cash flow. They're also ADHD entrepreneurs, right? So they love starting stuff, right? And they don't love managing big teams and stuff like that. So I think that's part of it, just where you naturally go. But, when you're younger, it's like, hey, I'm making really good money. What do I care what the valuation of the company is? When you're a little older, in your 50s, like me, you start thinking about that. Right. So
Yeah.
someday you're going to have to
Yeah.
sell it. So I think there's some of that there. So, but it's really important to understand that personal vision the owner has. And that, to be honest, that vision will change over time. We know that. That's fine, but just know where it is now and then regularly check in on it. So we try to keep people regularly looking at that. And we take you through a series of, so we assess where the level of your vision is.
Where you are.
And then we've set up a series of exercises to help you elicit, what is it I really want? Like, what do I want my life to be like? What do I dream, in the future about? I said that, I think I talked on a podcast a while ago about Chico, my alter ego who lives in Miami, right? What is Chico going to tell me? And then, looking at things like what's your number, right? Like what amount of money would produce say you get 10, 15 million in as a chunk that if you invest at a diversified portfolio, except for like the last couple of weeks, it will produce, a certain amount of income every year. And so there's something called the 4% rule, where the thought is that if you invest in a diversified portfolio, you can consume 4% of the income or of the total every year. And the portfolio will grow enough that it's almost impossible you run out of money. So it's something in the investment management world. So it sort of got developed. I actually don't know who came up with it, but they run these Monte Carlo simulations where it's like every outcome based on the history of the stock market. And they show at like 99% certainty that you can never run out of money. So like, what's that number for you at 4%? Some people it's like 500K, right? So divide that by 0.04, and that's the nut you need to have to get 500K in revenue or income.
Would be an example of one of the questions or the exercises that are part
and that
of
number.
these.
It's the amazing math of people that as soon as you approach that number, the number goes up. You're like, oh, but I could also have this house in Jackson Hole or on the beach or whatever it is for you, right?
And now I was just going to say, and they're thinking, since we're dreaming about this, what is it that I'd really like? I mean, that's part of value, right?
Yeah, and I think there's a certain amount where people just naturally want more than they currently have. It's inevitable. So I think you gotta know that, but it's good to know, at least have, like, a number in your head. Like, if I say I want $500,000 a year in income, so that's a nice living in most places, right? And, I mean, more than nice. I mean, I guess if you live in Manhattan, it's like below average or something, but in most parts of the world, it's a very, you're in the top couple percent of the income ladder, and that's 12.5 million, in like a diversified portfolio will produce that income. So for some people that'll be their number, or it'll be 15 and 600,000, right? But the point is to help you think through, hey, look, if I have 15 million and I could get $600,000 a year without working, that covers everything I could imagine I want. Why am I taking any more risk? Why am I working harder? Like, it's not the answer doesn't need to be, oh, I should just stop. It can be, yeah, it could be like, I just like doing it, or I want more, but you should check with yourself. Like, and it's sort of a mnemonic or a mental help. Like, I read this thing one time. If you go into a negotiation to sell your business, write down the number you want and put it in a drawer before you start. Because you're going to get into the negotiation and you're going to start arguing with the other person. And you're going to want to win the argument,
No matter what.
no matter what.
Right.
So at some point, you might be arguing for more. You might be like threatening the deal, trying to get $1 million more. And if you open the drawer and looked at the number, it's above it, way above it. And like, what are you arguing about at that point? Right. So I think that these are just devices to check ourselves and be like, hey, sometimes we do stuff just because we want to win. And maybe we're kind of subverting all our other desires just by trying to win in this moment. And, I think that happens in business. It's like, I don't want to, I'm here, I'm doing my thing and I want to win. And then you look down and you're like, oh, I said I only wanted $600,000 a year. And now I'm like working 80 hours a week to try to get $1 million.
The winning might not always align with your goals, with your actual true goals, right? What is the balance that you want?
Yeah. So the first thing we want to do is really tighten that up and say, hey, what are you after here? Are you trying to grow? Are you trying to create a high growth company? Do you understand the implications of that? It's going to be less money. You're going to have to invest more money. You're going to have to deal with more BS with firing people and bringing in new people. And
You're going to have to be ruthless.
you have to be ruthless, as I said, right? Or am I happy with my life now, but I understand the trade-off that I'm not going to grow? So that's the first thing, because the business strategy can't be done until we know what the owner or owners are after. And it's amazing how few people actually have thought about that beyond, they play with some ideas.
That's surprising to me. So you have so much experience doing this, but I mean, you have seen that people just don't think about that when they get into this.
No, because they think about it from time to time, but they don't think about it systematically. They're just like, oh, that sounds good. That sounds good. Oh, yeah.
I like that. I like the idea of a lot of money.
Right. It's like they kind of think about everything together. So it's like, hey, I would love to have a $50 million company that spat out $10 million a year in EBITDA and I don't work. That would be awesome. But like, okay, so everybody would like that, but there are going to be trade-offs to getting there. And are you willing to take them? Maybe you don't go to your kids' sporting events for 5 years. Is that worth it to you? Or maybe you don't take as big vacations now while your kids are at home, but you're going to have so much money when they're gone. Like, okay, is that worth it to you? Right. So, it's not that people don't dream and stuff, but they don't systematically think through the trade-offs and come up with like, oh no, I traded off this for that. And there's no judgment on what it is that you're going to do. It's just more like, have you thought through it and have you made the trade-off decision?
And are you in it? Are you in it knowing what you're getting into?
Yeah, exactly. Or like, it's like people talking about doing M&A. It's like, oh, I want to go buy other companies. Well, do you know what that's like? I mean, it is a freaking nightmare It's like you got all these crazy owners like you who are selling their only asset, and you're going to have to go deal with them. They're going to be late night calls, and they're going to be things that happened at the last. I mean, the stress level is going to be here, and then you're going to buy it, and it's not going to do as well as it's supposed to, or blah 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 blah. Right? But if you're willing to take that pain, and it's really, or you're like into that, there's sadomasochists out there, right? So you can get good at it and do really well over time, but you got to want to take the pain, and like you got to understand that trade-off. Most people just kind of go do it, and then they're in the middle of it like, oh, this sucks, right? So
Why did I
understand.
do this? What did I get myself into?
Exactly. I would say that's
Yeah,
exactly
it's
what they
such a
say.
novel idea. I think it's really cool.
Yeah.
And it's already, people can already take it, right?
Yeah. So you can
Not
go to
on
the
the
website.
website, but
Owner. Yeah, no, it'll be on the website when this comes out.
it will.
I'm putting it up today.
Mhm.
Ownerinstitute.com, and just there'll be a big red button that says take the assessment. And it's in the newsletter. I'll put it in as an ad every week. Yeah. And so we start with that personal vision. Then we go into the business strategy. Okay. Do you have, like, is your business model working? Right. This is another thing that I think I've really put a lot of time into, is there's a lot of literature out there on business model. Like, how can you get subscription revenue? How can you get payment terms to be better? How can you get your gross margin up? How blah, 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 blah. Are you delivering with software and automation versus or offshore or this or that? Right. And so what I'm trying to do is give owners a set of exercises to help them think through their business model. And like a lot of this is like we do, my one company does work with the government. There's only so much payment term stuff we're going to be able to do. So that's not really going to be available to us. Right. But there are going to be other things that are available to us. So we could pull the lever on. Right. And so, helping owners not completely re-architect their business model, but like, are there tweaks you can do? And some people will want to re-architect. So here are the best ways. Here are all the main ways that people have seen how to shore up their business and make it better and make it more valuable. So we have a section on that and strategy. I think that's another distinguisher. Your values and all that. How you're looking at the behaviors you want in the business and you want to see from employees, and how you hire and fire based on those behaviors. That's your values, right? And that, and there's all the other stuff around it, like do you have quarterly, yearly planning? Do you have that shared across the company? And then you go into, the 4 functions of business. So sales and marketing, what's your level of confidence and standardization of that? And operations, once you sell something, how well do you deliver it? Are you doing customer service? Do you have customer satisfaction in place? And then, your team, are you upgrading and monitoring your team and training them and all that kind of stuff, onboarding them well, hiring well. And then lastly, finance. And, are you measuring what you're getting out of the company? Have you optimized your pricing? Have you done your blah, blah, blah? And are you looking at at least a monthly like dashboard of how the business is doing? So basically we're rating you across those 6 factors. And the goal for me is, that's a lot of stuff, right?
That's what I would say as you're running through it. It's like, it's a lot, but to have it all in the one place.
Right. So it's good to take a look across, right? And say, where am I strong? Where am I weak? That's where we start. And really the goal is, what's the weakest area that's the biggest thing that you got to attack? Right. So like when I'm talking, and I'm talking to a lot of owners who are in a black hole, right? Or dissatisfied with something. But then let's start with the pain, right? So if you're presenting that finances are the pain, let's not worry about your sales and marketing process right now. Let's worry about finance first. And so the idea in Owner Institute is to tailor it to where the business is. And then eventually, we have our methodology. We'll take you through all the other stuff over time. But why focus on business strategy and sales and marketing if the problem is your team? So that's sort of the philosophy behind. And so you can take the assessment's free. You take it. I offer a follow-up call with me, talk through like your specific results. And what we'll kind of do is we'll score you across all 6. And then we pull out your best one. We always look at your personal vision because, again, I think it's the most important. But we'll pull out your best score and say, hey, look, this is great. Hopefully.
You're doing well in this area.
doing
Like your
well.
finances are great. Imagine.
Let's give you a
or
little
something.
pat on the back and say, good job. Right. But maybe you don't want to spend as much time there anymore because that's doing well. And then here's your lowest score. So like, this is what we should attack. And we have some, initial idea of how you can do that. I mean, obviously assessment can only get you so far, but then I do like a little half-hour call afterwards to just kind of focus on that and say, okay, here are some ideas for what you can do. And obviously you can work with us if you want, to work on those areas. And we offer coaching services and, we help you go through the planning methodology we have, and then we get you to like a monthly dashboard where you're making sure you're looking at all your key KPIs across, people, marketing, sales, finance, the whole bit, operations. And so that's our service. But, in general, it's like, hey, I can give you a half hour. Here's what I would do and take, my take on it. And then you can do what you want with it. You don't need to work with us. So anyway, so that's up there for people, and highly encourage you to take it. Ownerinstitute.com.
And how long does it take? It's short too, right?
Yeah,
Alan?
it's
quick.
6 to 8 minutes. Yeah, less than 10 minutes. Yeah, probably 6 to 8 minutes to get the answers. And we give you a little customized report that comes, right into your inbox like a minute later. So it's pretty cool. Yeah, I like it. And
Yeah, it's really cool.
And if you take
where I
it-
don't think
yeah, I'd
there's
love to-
nothing else like that out there.
Yeah, I haven't seen anything like that.
At least,
Yeah. But yeah, and I'd love feedback on the report too. If people take it and they're like, oh, I like this, I didn't like that. That's cool too. I'd love to hear that. You can always reach me at alan@ownerinstitute.com. Cool. Well, I think that's a good overview of the new assessment and report
rolling it out, and you said it'll be up soon on the website. So
by the time this is out.
it's
Cool.
exciting, Alan.
Awesome. All right. We'll talk soon.
You've been listening to the Small Business Black Holes podcast with Alan Pentz. For more insights on mastering the new game, follow @apentz, that's APENTZ on X, and make sure to subscribe to the podcast so you don't miss a single episode. Thanks for tuning in, and remember, in today's world, you don't follow the rules, you write them.